Newsfirst Newsline with Faraz Shauketaly.
Hello, very good evening to you and welcome to Newsline Live. Well, this evening we thought we'll talk about the stock market. What it's doing. Is the stock market ill? And if so, what is the doctor, also known as the SEC, the regulator, what is the regulator doing about that? Especially when there is talk that the captive funds like the EPF may well be reinvesting in the stock market, making a return to the stock market. And there is, of course, grave concern whether the market has enough controls in place so as not to allow a return to, shall we call it, the bad old days of 2011-12, when there was a lot of so-called pumping and dumping. Well, let's discuss this and a bit more with our guest this evening, a financial advisor and former stockbroker, Arjuna Dassanayake. Hi, and good evening to you, Mr. Dassanayake.
Good evening, Faraz. Thank you for having me. It's a pleasure to be here.
Thank you. So, is the stock market ill? And if so, what is the doctor doing about it?
Well, let's leave the doctor alone at the moment. It was, I believe it went a little bit too fast to 9,000, almost 8,800 within a period of 27 days.
That is in January.
From January 1st to, I believe, 27th of January, the market moved up 30%.
Right.
So as in any business, you know, when it moves up too fast, there are reasons for it to move up too fast, and then the market forces take control. And well, it has ended 5% above December 31st. And I'll take 5% anytime, more than 30% in 27 days.
But the market,
which is very healthy.
Yeah, but the market must be, something must be wrong fundamentally, because if you look at the growth, Sri Lanka's growth rate and so on, and then you compare that, in 2011, 12, we, after the, shall we call it, the valiant efforts of Mrs. Sugaradasa and Mr. Kada, we'll come to that in a moment. But after those attempts, the market was sort of brought under control. The price, the all-share index came down to around 7,000. But 10 years plus, it is today again at 7,000.
Yeah.
And even if there was a small growth of 5% or 6%, it should be more than 7,000. Doesn't that indicate to you, Mr. Dassanayake, that there is something fundamentally wrong?
Faraz, in my opinion, I will take a slightly longer period. You know, I don't want to harp about this 27 days.
Right.
But if you take May, I think...
But I'm taking 10 years.
No, I'm not taking 10 years. I'll take May of 2020.
Right.
Market was at 4,600 points.
Right.
It came up gradually on low turnover up to almost 6,775 on 31st of December. So it was on low turnover, not very extreme.
During the pandemic.
During the pandemic, because you see what happened was there was no other options for a lot of people. Interest rate, the risk-free rate is 5%.
Right.
Okay, the tourism is down. You know, basically shut.
Yeah.
Hotels are not operating. Then you get the casinos are not operating.
Right.
You see, so you had a lot of people not being able to, you know, fund themselves through their regular businesses.
But they have money, and they
have money.
The cash is there, but they don't have investment opportunities.
Exactly.
Because the rates are down.
Exactly, the rates were down, and therefore this gradually from May to almost about September, you know, people started looking at the market, and it was continuously, slowly moving up.
Right.
And you know, people were making the thousands, the 10,000s, you know, on a monthly basis, and that grew. By December, there was a lot of people in the market. I mean, personally, you might be knowing, basically almost, you know, your circles, friend circles, almost, you know, 75% of your friends were talking about the stock market.
Well, I think
that's
more than that, everyone was talking about the market.
Yeah, because that was the only option,
right.
You see, to make money. And I think whilst, you know, people realize, you know, Of course, Sri Lanka was not badly hit with the COVID-19 in terms of death and infections.
In comparison to
in
other-
comparison to most of the other places. So I think we got, like, how we recovered after the tsunami and all that, we have it in ourselves that we got a little bit confident,
Right.
and things were going to get better, which did happen.
Okay.
And then I think the beginning of this year, I think we got a little bit ahead of ourselves and lost sight of
You put
certain,
it, you put it rather nicely, getting ahead of ourselves.
Yeah.
I would say to you, or rather I'd ask you, whether this was more to do with market manipulation and perhaps an attempt at pumping and dumping, or something similar to that, where it is certainly a small group of people manipulated this and made enormous sums of monies for themselves. And then comes the rest of the pack, the smaller investors, the general public, who are probably underinformed,
Definitely.
and
That is a
they
fact.
enter the market towards the top,
highest cycle.
and then before they know it, their investment itself has been wiped out because
Correct.
the prices start to drop, as we saw.
Their-
We had a situation
Their
where
investments are down if you have bought on borrowed funds. You
Yes.
see, otherwise the market is down about 20%, 25%, 30%.
Yeah.
Okay, so
then
if
see,
you have invested 1 million
borrowed-
rupees,
Yes, but borrowed funds. Now, for example, there was a circular sent out by the SEC, and then this caused great unhelpfulness with various so-called high net worth individuals.
so exactly for
And
us.
if it is high net worth individuals, and if they know the market so well, why don't they put their own money? Why are they just trading on the 3-day term and so on and so forth?
For us, it's not a small thing to explain, but you see market going up from 7,000 to 9,000.
Yeah.
Yes, there was something wrong, something happened, but if you had the normal market forces like in any other market where there is short selling and various other liquidity, free available liquidity in the sense in terms of shares, where there were certain strategic moves made by seasoned campaigners, you
Right.
see. And also, when it was going
Is
up,
that a nice term for people who manipulate the market?
you can't say not everyone is a manipulator. For us, take
Right.
about say 10, 15 people, I would say, would be doing that on any market.
Right.
Look at Dow Jones, what happened with GameStop.
Yeah.
$20 stock went to $450 in a matter of 2 weeks,
Right.
3 weeks.
Point
You see?
taken,
Yeah.
point granted,
Yeah.
but
And mind you, that is with short selling.
Right.
They took on the short sellers.
right.
You
But
see?
in this country, in our market, in a sort of rather limited market, and where the government would love to see the players in the stock market being broad-based, so that more and more people would have a CDS account and trade on the stock market.
Yeah.
To do all that, one must, don't you agree that one must give the investor a
Confidence.
confident
Yes.
move, and they must be happy that they are entering this area with all the best intentions.
So, Faraz, this is the fault with bull markets.
Right.
As in, I mean, it's a known fact that during a bull market, everyone is an advisor. You take advice from your neighbor, your friend, your sister, and keep investing because it is, it's a good time.
Yeah.
You buy one today, you can sell tomorrow at a profit.
Yeah.
But when the market starts crashing, that's where professional advice is needed.
Right.
Then only, you realize why is it this stock crashing. So there are several factors. It's like, in a cricket, you see, you and I can't go and play a leather ball cricket match tomorrow.
Yeah.
You see, because you have to understand what the game is. So stock market is also, there are fundamentals in investing.
I'm going to take some questions that the public have sent in. Thank you very much. One of them says, of course, and it's a very valid point, the stock market doesn't control Sri Lanka's economy. Having said that, the market to move up 2,500 points to 9,000 and then drop back to nearly 7,000 points is because the market is sick and unhealthy. It needs treatment. And as you said, Faraz, what is the doctor doing? It's more like a gambling den. This is another one. It's more like a gambling den than a respected marketplace. Company valuations moving up and down for no fundamental reason. Can an investor trust his investments in such a situation of the prices moving up and down? Another one, the SEC should step in. Another one, the SEC has been asleep most of the time and comes in at the last moment when all the regular patterns are done and just when the unsuspecting, fairly inexperienced and greedy have invested at the top of the cycle. Added to that, the SEC goes on a media bliss, justifying their actions and further scares the small market participant. Wow. There's an interest in this.
Quite a long question.
Well, many. There
Yeah.
are many
Faraz,
questions.
Faraz, there is no doubt that people have to have confidence in the market,
Yeah.
you see. But it will take some time. You need to study the market as well, not just come and invest.
But, you know, one of the
regulator, I believe, yes, the regulator has a role. But
A serious role, surely.
Yes, there is definitely a role. But for us, everyone is evolving. The market is evolving. The investors are evolving. Even, all stakeholders are evolving.
Obviously,
okay?
you can't
So,
stop people from trying to shortchange the system.
There will always
But we
be,
need the regulator.
with all the regulations, there will always be someone who will try to short circuit the system.
Yeah.
Okay.
But especially when there are
Yeah,
public
yeah.
funds
Yeah,
involved.
because
that
you
we
can't
don't want
restrict
leakage.
investors for us.
No, that's
you have all sorts of investors. You
Yeah.
have genuine investors. You have short-term investors. You have
And you have pumpers and dumpers.
pumpers and dumpers and collectors also.
Yes.
Okay. So that is that you see, markets have to be free for it to operate properly. You see, there can't be too much of. There has to be regulation, but it shouldn't be over-regulated. Okay. So for a market to function freely, there has to be certain bit of regulations and total understanding of the market. So there will always be. You see, there's a saying for us: bulls make money, bears make money, but pigs get slaughtered.
Mr. Dassanayake,
Yeah.
if you forgive me, but over the last 6-7 years, and even more actually, we've been covering this this unfortunate place called the stock exchange, because so many ordinary people lost money in big way, especially in 2011, 2012. We had somebody, regulator, Mrs. Sugaradasa, exited gracefully. Mr. Kader was moved to a position at the Ministry of Finance. In my view, another side being pushed aside, was replaced by another regulator, and by then, of course, the government changed. Then came the incoming government. They promised, they said, oh, we're going to look at those 11 or 12 files. We had Mr. Tilak Karunaratne regularly on our program, and every 3 months or so he'd promised that something was being done about those files. Nothing really has happened, and we need action.
So far as, yes, you need action, all right, but there has to be, action cannot be taken overnight. They have to study certain things. I'm sure, the regulator has come a long way from where it was, but there is always room to improve, and they will have to do a much more.
Now, for example, Mrs. Sugaradasa, I'm going back to that time now, because we had handbrakes put on. We had, if a stock went up in a day more than 10%, bang, it was on hold. Right?
So why wait till that?
Exactly. So now that has been
regulation
removed.
is not only about that.
And they also stopped the complete giving of credit. Brokers were giving credit willy-nilly.
It's not regulated.
Right? It was, and they brought in the rules. Part of that is still in place, but the emergency handbrake is not there anymore.
Yeah, it is. As I said, market has to be free. It has to correct itself. You see, then there will be people who will lose money if they have come in the wrong time. And for us, you have to give credit to certain. You see, starting from 2005. This market, there has been a set of investors who has always been in the market. Okay, so they have, for the past 20 years, if you take, there have been only about say 3 or 4 years where the market has really gone up. Even in the case of 2009 post war, it went up till 2011, and then after that again it was a bear market till 2015. Then for about 2 months it was up, and then it started moving back. And there was no focus about the market by anyone at that time when the market is on a bear market.
Right.
Okay. So you have to give credit to some of the investors, strategic investors who are still in the market.
Right.
And you have to talk about the industry as well. Industry was not doing well at all. You see, people, the wages were down, people were, being laid off, and it was not an attractive place for a newcomer to join, where the salaries were small. And so the industry itself.
You're almost being an apologist for
no.
them.
So I'm saying.
Let me come back to you. It's now time to have a quick peek at the headlines for this evening's primetime news. Don't go away. This is Newsline Live. We'll be back after this short break.
Newsfirst Newsline with Faraz Shauketaly.
Welcome back to Newsline Live. I'm in conversation with Mr. Arjuna Dassanayake. Our topic of discussion today is the stock market. I'm going to read a message or two which I've received there. Regulation and understanding are two different things. That's one.
Yes.
Another one. You might not agree, but still. He's rather a sweet fellow. Please tell him not to get angry when we are I presume because we are asking these questions. And a third one, he should know that the market went down, I presume recently, because there was pumping and dumping going on. Mr. Dassanayake, when we looked at the market capitalization during this period that you were talking about in January, all of a sudden, this rather staid stock market, we had a tiny little company without any explanation ending up as the third biggest company in terms of market capitalization. To me, it suggests to me that this figure, this market cap figure, is just bunkum. It has no real relevance, not when you have a upstart coming along and saying, look, I'm number 3.
You see, market operates on greed and fear for us, and demand and supply.
Yeah.
And when there is a certain stock moving up unrealistically, it was, I had to say that a lot of people got into these certain particular stocks that moved up.
Yeah.
But you have to realize that the seasoned investor knows there is a limit.
But
what always happens is, for us,
yeah,
the insiders, that is, I'm talking about the real stakeholders who know about the market, stockbrokers, the long-term investors, the regular investors, they all know a cycle.
Yeah.
You see, when it gets too heated up, they know they sell. For example,
they get out of the kitchen.
Yeah, they get out of the kitchen. For example, for us, January 1st, if someone invested expecting 15-20%,
yeah,
and by the 15th of January, if the particular stocks that they have bought has gone up by 100%, they just get out. They are not waiting for another 150%. You see, what you invested for 1 year, if it is yielding you 100% in 3 weeks, they get out. Those are the smart guys. But
3 listed companies triggered the so-called bull run.
Yes.
Do those high prices of those companies, can they be justified?
For us, it's demand and supply. No one held a gun on anyone to buy those stocks.
But back in 2011 and 12, did somebody hold a gun, or maybe even in 2015, did they hold a gun at the committee representing the interests of the working people of our country, the EPF funds? Did somebody hold a gun to their head and say, buy these shares, they're trading at several times the net asset value, and 11 years later or 10 years later, those shares are still not market rated?
Yes, for us, yes, things have happened.
Yeah.
Yes, but of course, regulations have been placed now. I don't think those funds have bought in the recent past at some of the unrealistic prices. I believe they have not been in the market.
Right.
So they are not involved in this cycle. but you can't, you can't say that there was nothing. There were certain things that happened, but the best way to control this is to leave the market free. Regulator definitely has a role.
He needs to wake up.
Yeah, it's a wake up. But having said that, there shouldn't be overregulation as well. For example, I don't believe in that that 2000 level mechanism.
The 10% handbrake.
Because that actually what happened. I mean, I have been in the industry at that time.
Yeah.
I saw it's always the poor investors who got burned because they didn't know what was happening.
Right.
They didn't know when to sell. They didn't have access to brokers. Some of them, they are small, so you don't get to call. But now the systems are much better.
But in a scenario, Mr. Dassanayake, when the public and the republic knows that our regulator is tough, is proactive, is incisive, is decisive, then the public and those people who pump and dump the market, they'll know not to start getting hold of the fire.
So
because they'll burn their fingers.
So tomorrow it will be someone else who will start doing the same thing. But yes, if the regulators are strong and taking decisive action, yes, the perception will be much better. Indeed. Right now, the perception is that everyone who got burnt, they want to get out of the market, don't come back into the market, which is very detrimental.
Yes,
you see, it's in the interest of all stakeholders for broad basing the investors.
I was about to ask you. Yes. Isn't it a good idea for the regulator to insist and implement a minimum public float? That means a minimum of the company. There's no good somebody having 90% and only putting out 10% on the public, and then out of that somebody might have 5%.
Yes, so that comes with the regulator has to act on those situations. There can be possibilities where the free float of a particular company is say about 10 or 7%. If you really take the top 20 shareholders, you might, with your experience, you might know out of the top 20, almost about out of the free float, the 20% free float, about another 10% is held by several
Can I ask you this question?
So you can strategically, strategic buyers can strategically manipulate because there is only a little bit of shares. There is a possibility of manipulating. Say, you buy out of the free float, you buy 10 million shares. Free float is 50 million shares. You buy 10 million shares, I buy 15 million shares. Then the free float is only about, 15 million?
Right.
Yeah, sorry, 25 million. 10 million, 15, so it's 25 million. So that 25, then all of a sudden the price starts rising.
So these are the things that the regulator must regulate.
It can be.
And implement.
Yes.
Can I ask you a quick question?
It is.
We are on Newsline, and at Newsline we do ask these tough questions, sometimes odd. But having been in the industry for so long, I know you're not now, but having been in it, especially during those heady days, would you tell me, just a yes or a no is fine, would you tell me whether you know the identities of people who've been involved in pumping and dumping? I'm not asking for the names.
Tough question. Yes, I suppose I can figure out a few. Yes.
Okay. Well,
but it's not only pumping and dumping and collectors also.
As well.
Yes.
Well, thank you for being upfront. I'm not going to...
No, you can't say it didn't happen.
I'm not going to...
It has happened, yes.
Yes,
certainly you have to.
And
but certainly things are much better than what it...
Another yes or no question. Another yes or no question. Because I don't want to upset my group legal man. Right, so don't mention any things that will take me to court. But I want to ask you another one. As a professional and representing your clientele and so on, would you not feel much better if the regulator was actually to take action against the
wrongdoers? Yeah, it has to. It's definitely. I'm certainly for it. But for us, it has to be done discreetly. You can't be, you and I shouldn't know about it. You see, I believe that is happening. You see, regulator.
I should know about it because I'm in the media.
No, later
And
on, when they are
tell the
ready
world
and when
about
they
it.
have a case, yes, you
Right.
should know it.
Okay.
But there is a lot of background work that needs to be done.
Yeah.
You see now, for example, you know, in the US, how they captured one of our Sri Lankan top fund managers. How
Yeah.
did they do it? No one else knew.
Yes.
You know, until the investigations have been going on for almost years.
Yeah.
You know, they are wiretapping, all those things. So, does our regulator have those facilities? No.
Well,
So,
they
there
could
is,
have.
yeah, so that's, you know, those regulator has to get those laws and all that in the system. I don't think it is available. You see, so our market is very immature at the moment. So that's why it has happened.
As we end this program, whilst thanking you, Arjuna Dassanayake, for being on the program and being as upfront and open as you can, finally, we must warn the people, wannabe investors, that the stock market is not for the faint-hearted. It is not for money that you're saving to pay for your children's next semester. You must be informed,
Yes.
and you must make considered decisions.
And it has to be medium to long-term decisions to come into the market. It's not a
Thank you very much,
Daily.
Arjuna Dassanayake. And it's now time for the primetime news from News First. Take care, have a great evening ahead of you, and as always, God bless you.